those of you that are trading stock indices and don't know the following information, you are doing it wrong. Anyone who tells you that you don't need to know what the underlying stocks are doing are telling you the wrong information. In today's video, we're going to be discussing equity indices, specifically the S&P and the Nasdaq, otherwise known as ES or the NQ in futures terminology. Before you see a chart. This chart is a representation of the top 10 names in both the S&P 500 and the NDX by weight. You will notice each one has a number, weight, percent next to it, as well as a total. What does this represent? Let's start with the S&P 500. The S&P 500 is 500 names. The S&P is calculated using a free float market capitalization methodology. So to simplify it, basically means they take all 500 underlying names, separated by market cap. And the bigger the market cap, the more weight that company has in the S&P. So you'll notice at the top, you got Microsoft. You also have an NDX. The NDX does the calculation somewhat similar. It's a little different, but somewhat similar. But you'll notice the top three names, Microsoft, NVIDIA, Apple. Then goes Amazon, number 4. So your top 4 names are exactly the same. Your top 4 names in the S&P represent a total of 23.26% of the index. Out of 500 names, 4 of them represent 23.25% of the index. In the NDX, the top 4 names are 30%, which means out of 100 names, the top 4 names represent 30% of that index. This is very, very powerful information. You'll also notice the top 10 in the NDX represent 50% of that index. Let me repeat that. Out of 100 names, the top 10 represent 50% of that index. So these 10 names are what's moving the index around. In the S&P, the top 10 names represent 35.75% of the index. Again, out of 500 names, the top 10 are representing almost 36% of that index. That alone should open your eyes quite a bit. Why do I say that? By nature, what you are trading is an index. An index has underlying stocks or underlying instruments in order to move that index. The S&P, you're trading the equivalent of 500 names. If you're trading the NQ, you're trading the equivalent of 100 names. You need to be aware of what those names are doing. Just for yourselves to understand, technology or tech is 33% of the S&P by weight. It is the highest weighted sector in the S&P. So if you're going to trade S&P and you don't know where the NQ or the NDX or tech is, you are doing yourselves a disservice. Let's go a little bit deeper to understand what I mean. I did a little math here for you. At the time of this video, the ES was at 6197.50. The NQ was at 22,679. Obviously, it's subject to change based off of market fluctuations. The S&P is $50 per point. The NQ is $20 per point, which means every time you buy one ES contract, you are holding or controlling the equivalent of $875,000 worth of stock. If you were to buy the NQ, it would be $453,580 worth of stock. One ES contract is equivalent to 500 shares of the SPY ETF. One NQ contract is equal to 800 shares of the QQQ ETF. These are highly, highly leveraged products. Now, if you're trading the micro, instead of it being 500 shares, it would be 50 shares in the micro ES. And instead of 800 shares in the NQ, it would be 80 shares in the micro. This is the amount of stock you are technically controlling when you buy these contracts. Why is this important? The reason why it's important is when you're trading an index, specifically a stock index, you need to be keenly aware of what the underlying stocks are doing. If you do not know what those stocks are doing, you are at a total disadvantage. You don't need to be trading the underlying stocks, but you need to know what they're doing. There are times where the index could get a little bit ahead of where the stocks are. So if you start seeing that the index is going higher, but yet the stocks are going lower, something is wrong. You cannot approach equity indices from just plain charts. It's not going to work because you're missing pieces of the puzzle. You need to be keenly aware of what the stocks are doing. You'll notice here I have a chart up of the ES futures. There are a lot of gaps in the chart, and you'll ask yourself why there's so many holes. It's a 23-hour instrument. The reason being is because this is an RTH chart. Very simple. If you're trading the ES or the NQ, which is a derivative of either the S&P or the NDX, you're trading a derivative of that index which holds the underlying stocks, or is a calculation of those underlying stocks. So if the stocks are not open, the index is kind of meaningless because it's not calculating off of anything. It's just kind of free floating whatever it's going to do. When you should be in these things is during market hours, 9:30 a.m. to 4 o'clock p.m. Eastern Standard Time. That is the only time you should be in equity indices. So you'll ask yourself, well, I've been taught or I've been told that 23 hours, I could trade them at 6 o'clock at night, I could trade them at 8 o'clock at night, I could trade them at 2 o'clock in the morning. They're always open, they're always moving. What's the big deal? The big deal is that the underlying stocks are not open. So because the underlying stocks are not open, there's no calculation. You're trading figments of imagination of what people think are going to happen. You'll notice that at times the futures will be going up all night long. And as soon as the market opens and the underlying stocks actually start opening, the futures in the exact opposite direction. It doesn't happen all the time, but it does happen. Why is that? Because now that the stocks are open, the index is actually starting to calculate against something that's real, as opposed to fairy dust, as I like to call it. It is very important for you to always be aware of what the stocks are doing. You don't need to be trading them, but you do need to know what they're doing. Are they making new highs in the day? Are they making new lows in the day? Are they sitting in the middle of the range? What are they doing? The reason for this is because a lot of times you will get wrapped up in just your chart. And because of that reason, you don't know why things are not going. And you can sit there and get very, very frustrated because you don't realize what's happening. So for example, if you have Microsoft and NVIDIA are the top two names, and let's say Microsoft is going up and NVIDIA is going down, what do you think the index is going to do? Let's assume, for the sake of this discussion, that Microsoft is up 1% and NVIDIA is down 1%, just on these two names. Let's leave everything else out of this for a minute. Where is the index going to go? It's going to go nowhere, right? Because number 1 and 2 are going in the exact opposite directions. So you have to be aware of what the actual stocks are doing in order for you to get an advantage. Because if not, you will sit there and you will get incredibly frustrated all the time. It's very, very important to not have your head buried in the sand when it comes to these equity indices, whether you're sitting with charts or whatever you're using. If your face is buried in the sand and you don't know what Apple, Microsoft, Amazon, what they're doing, you're going to be frustrated. So today's tip for equity indices is know what is happening around you. One of the ways that you could use in order to not have to, let's say, track all of these stocks, because it could get very cumbersome, you could use, which I've done this before in the past, the NYSE FANG index. The NYSE FANG index will give you exactly what's happening. Why? In the NYSE FANG, it has all the top 10 names. Microsoft's there, Amazon, Apple, NVIDIA, Broadcom, they're all there. So within the top 10 names of the S&P and the NDX is the NYSE FANG. So that one index will give you a little bit more, almost like a cheat sheet. to give you an idea of what's going on. So to recap, when should you be in the ES? 9:30 to 4 o'clock. Anything outside of that, you are trading nothing. What do I mean by nothing? The underlying stocks are not open. What drives the indexes is not open. So you're trading nothingness. So you need to be careful not to be in those times. There's always a saying in trading, be in the right market at the right time. And it holds very true for equity indices. You should not be in equity indices in the middle of the night. You should only be there when the stock market's open. If the stock market is not open, don't be there. Why? Because the stocks are what's going to drive the indices. So if the stocks are not open, they're not driving the indices. So you have nothing driving it. You could say your chart patterns, you could say all of these things from today until tomorrow. I'm sure it's great, and I'm sure it works for some people. But the reality is, and I'm sure if you're trading long enough, you've seen it. When the market opens and the stocks actually start to open, the indices go in a completely different direction because now the stocks are open and they are driving everything. So just be aware of that. Be in the place that you're supposed to be when you're supposed to be there. Thanks for watching, and I'll see you on the next one.